Hello, everyone. Welcome to the Millionaire Millennial. I am your host, Stack Banks. Quick background about myself for those of you who don't know. I'm the CEO and founder of No Man's Land Records. It's an independent record label. I'm also an artist on the label. Shout out to all my fans if you follow my music or know me from that. Also, I'm the CEO and founder of the Bank's Fine Jewelry and Rarities, the Bank Digital Asset Solutions, a Web3 and blockchain technology company I started a few years ago. And I do have a background as well with a company I had started, the Lions Group Business Consultants. And of course, I founded and host the Millionaire Millennial podcast. So some of you may have noticed the Millionaire Millennial was nearly non existent all of 2023. I took a brief sabbatical to just focus on business and getting my team structured correctly and getting ready to launch some music this year. But also this year in 2024, we're going to be back full force. TMM will be releasing episodes bi-weekly, more than likely every Friday as a weekly wrap up, and on Mondays to get your week started. And we'll hopefully continue to ramp up until we're dropping episodes and content for our listeners daily. Now that that's been addressed, I want to fill you guys in on a little bit what to expect from the show going forward. The show is focused on delivering up to date, sound business news and information in a readily understandable and relatable way. It's geared towards the millennial generation, but it is for everyone and anyone who's trying to achieve any type of financial fitness or health, whatever you'd like to call that. TMM's focus is going to be on a sort of just a quick daily breakdown of the health of the global financial markets, as well as the Web3 and crypto industries specifically, especially right now. I feel it's a good focus for a lot of young people, millennials or Gen Z, Gen Y. That's sort of the final frontier, new frontier of the financial markets, at least right now. And I think quite a few people have a good chance of actually getting into those markets and doing fairly well. So we're going to focus on Web3 and the crypto industry. Also, anything of interesting value or value propositions or things that we see at play in the market or how they might impact you, the latest buzzings around the internet, or that anything that might be of value or interest, at least in my opinion. I'm still going to aim to bring on high value thought leaders, entrepreneurs, industry experts, founders, professionals, CEOs as guests throughout the season. But my focus is going to be presenting you guys with the facts of the financial world around you to the best of our ability, objectively and as quickly as possible. Now, with all that being said, understand nothing I say here is financial or investment advice. Please, please do your own research before making any financial or investment decisions. Talk to your financial advisors. Make sure that you are only doing things with money that you understand completely. Do not just listen to some podcast or some guy out there on the internet and go take your life savings and park it into anything that you hear, let alone just anything that I say. Please do your own research. Okay, so this is not meant to be taken as financial advice. This is meant to be taken as information, and you guys can do with it what you will. So let's dive right in. When I had written the script notes for today's episode, I actually did it Friday. Today is Monday, the 27th of February of 2024. So I wrote this on, I believe, 4 days ago. So it was meant to be done the 2020 on February 23rd, but not much seems to have changed within the markets. Everything seems to be pushing up, but the things that I'm going to address, at least within this episode, all the information is still relevant to that. So I'm going to be referencing a few different articles. One of them is going to be by Karen Fryer and Hamza Shaban. They write for Yahoo Finance. They're referenced in today's articles. And we'll go further into detail about some of Friday's financial news, which is actually impacting this week as far as earning reports moving forwards throughout the week. So as of Friday, U.S. stocks had fell slightly, but they powered through a record-breaking week. It was stoked by AI chip makers NVIDIA's blowout earnings. The S&P had risen just above the flat line, fetching a new closing high, while the Dow Jones Industrial Average increased 0.2%, or about 60 points, claiming a new record of its own. The NASDAQ composite headed in the opposite direction, finishing down about 0.3 after a blockbuster week of trading. and investors appeared to catch their breath after a worldwide breakout, which appeared to add about $277 billion to NVIDIA's market value for the biggest single day gain in Wall Street history. That was Friday, folks. NVIDIA, the chip maker, shares continued their rise Friday, pushing the company close to a $2 trillion valuation. So NVIDIA, if you guys don't know, is a company that is in AI, but they're also in graphics cards and computer chips. Their valuation and the rate that their company's stock price is climbing is just insane at the moment. It's record breaking. Lots of things in the Web3 crypto space that if NVIDIA continues to do what they're doing, it's really going to revolutionize Web2 and Web3, I believe. So I'll continue on. So beyond the AI frenzy, the chances of a U.S. interest rate cut are coming back into the view for the market. A parade of Federal Reserve officials underlined that cuts are coming, but not soon. Though they deferred on just when the shift might start, a solid fourth quarter earnings season is winding down with more than 1/3 of reports so far beating estimates. An upbeat earnings forecast from Block, ticker sign SQ, was followed by a 16% jump in the fintech shares, while Carvana, ticker sign CVNA, stock popped about 30% as investors welcomed the used car seller's first annual profit. Zoom, Salesforce, Lowe's, and Paramount are all among the major names to report next week as the fourth quarter earnings season that has largely pleased Wall Street winds down and pushes the market to new heights. A new reading on GDP will inform Fed officials as they continue to weigh economic data leading up to up to the first round of rate cuts, although when that will be continues to be uncertain. Federal Reserve officials have maintained that cuts are on the way, but recent remarks have tempered expectations that they will arrive soon. Investors and policymakers will also be on the lookout for the latest consumer confidence data, as well as new readings on personal consumption and income. The coming days will bring new insight into the housing market with fresh data on mortgage applications and new home sales, giving shape to how 2024 is developing. Companies such as Zoom, Domino's, Lowe's, Macy's, AutoZone, eBay, Vizio, and industry giant Berkshire Hathaway, just to name a few, will begin reporting starting today, Monday, the week of February 26th. So, excuse me, I believe I'm actually late. That was started Monday. The earnings reports for those companies, amongst dozens and dozens of others, huge companies, started Monday, are continuing on into the rest of the week. So today is actually Tuesday the 27th. Also of note, Reddit's Wall Street Bets is an IPO risk factor. Some of you guys remember that from if you guys haven't seen it, great movie. I believe it was called Dumb Money, but it was about the Reddit's IPO, Reddit's Wall Street Bets, talking about the GameStop situation. So Reddit's IPO, their initial public offering, for those who don't know, so Reddit's actually going to be offering a stock itself. So Reddit's IPO filing called out the meme stock trading frenzy from 2021 that emerged from its Wall Street Bets forum, but not in a way you might expect. The company noted the notorious subreddit in its discussion of risk factors leading up to its public offering. They said, quote, "Interest in our Class A common stock from retail and other individual investors for reasons unrelated to our underlying business or macroeconomic or industry fundamentals could result in increased volatility in the market price of our Class A common stock," end quote, the company wrote in its filings. So the same retail investor interest and energy that propelled stocks like GameStop and AMC attracting extreme volatility could be pointed at Reddit itself, the company was warning essentially. They said, quote, "Given the broad awareness and brand recognition of Reddit, including as a result of the popularity of Reddit/Wall Street Bets among retail investors and the direct access by retail investors to broadly available trading platforms, the market price and trading volume of our Class A common stock could experience extreme volatility for reasons unrelated to our underlying business or macroeconomic or industry fundamentals," Reddit said. That was a direct quote by them. One of the major takeaways of the COVID-era meme stock mania was how social media could influence the market, underscoring the impact that motivated retail investors can have on stocks. Come Reddit's IPO, the same dynamics might again be unleashed. So that might be of interest. You guys look out for that in the news. In other news, a Fidelity International money manager has sold the vast majority of U.S. Treasuries from funds he oversees on expectations the world's biggest economy still has room to grow. So this guy, before I even get into it, his last name is incredibly hard to pronounce. I believe it's F. Staphopoulos. I have no desire to try and pronounce that. I am going to just call him by Mr. E for the rest of uh, the time that I have to talk about him on the podcast, but I'll continue on. So, Singapore based, his name's George F. Staphylopoulos, Mr. E to you and me, who helps manage about $3 billion of income and growth strategies at Fidelity, sold the bulk of his 10-year and 30-year treasury holdings in December. He's now turning to assets that typically do well in times of good economic growth to boost returns. Mr. E's among those cooling on treasuries as the U.S. economy's resilience forces investors to rethink bets on interest rate cuts. Some are going a step further, speculating the Federal Reserve's next move may even be a hike after the recent strong inflation and jobs reports. Traders are now pricing under 4/4 point interest rate cuts in 2024, down from wagers for 150 basis points of cuts this year starting March. Bonds are reflecting the swing in sentiment, with 10-year US yields advancing more than 40 basis points since the start of the year to 4.3%, as comments from Fed officials also reinforce expectations of higher for longer rates. Now, the Fed Vice Chair Philip Jefferson warned on Thursday about the dangers of easing too much in response to in response to easing price pressures, while the Fed Minneapolis president Neil Kashkari said, quote, "We still have some work to do," unquote, on inflation. Now, Mr. E sold treasuries as concern over U.S. growth faded. The asset is typically less attractive amid elevated borrowing costs, and when prices reflect the Fed's median forecast of 3/4 point interest rate cuts in this year. He also sold bonds from other developed markets, including gilts and bunds, while leaving some exposure to inflation-linked U.S. government debt and an idiosyncratic position in Austrian bonds. The U.S. economy is showing, quote, "more signs of reacceleration than it is of slowing down," quote, Mr. E said, adding that, quote, "I wouldn't be surprised in a couple of quarters down the road we end up seeing sort of manufacturing PMI in a more expansion sort of territory," end quote, in developed markets. That on Thursday reinforced his view as U.S. jobless claims dropped to the lowest in a month, underscoring the strength of the economy. Some funds, such as Jupiter Asset Management, are taking a different view, opting to load up on treasuries while seeing risks of an eventual hard landing after the Fed's most aggressive tightening cycle in decades. E helps oversee a number of strategies, including a global multi-asset growth and income fund that gained 5% in the year January 31st in the year to January 31st, according to the company fact sheet. In comparison, the Bloomberg Global Aggregate Total Return Index of worldwide investment grade bonds rose about 0.9% in the same period. The fund had dropped 2.31% over a 3-year period, the fact sheet showed. So he's doing basically 5 times better than the next best fund next to him. So his viewpoint, a lot of people take to heart. So E took profit on a top money-making bullish India equities trade last month as prices soared, rotating instead to a U.S. mid-cap and Greek stocks. He also likes Japanese banks. The strategy is now more positive on stocks, but very underweight duration, he said, referring to a measure that typically reflects the sensitivity of a bond portfolio to changes in interest rates. He said, quote, "We've gone through a massive disinflation period and growth seems to be okay, and the labor market seems to be okay. If this is where we land, this is a great place." So what he's saying is growth worldwide had slowed, and now we had gone through this massive disinflation period, and then now growth has seemed to be ramped up and the labor market seems to be okay. And he's saying if this is sort of where we land at somewhere in there, this is a great place for the economy almost across the board. So let's talk about NVIDIA a little bit again. So the tech company NVIDIA reported its fourth quarter earnings after the bell on Wednesday, beating analysts' expectations on the top and bottom lines. For the quarter, NVIDIA reported adjusted earnings per share, EPS, of 5.16 sorry, of 5.16 on revenue of $22.1 billion. Analysts were expecting EPS of 4.6 on revenue of $20.4 billion. That's a massive jump from the same period last quarter when Nvidia reported EPS of 88 cents on 6.1 billion a year ago. So to put a finer point on Nvidia's performance, the company reported $27 billion in revenue for all of 2022. The company also guided higher than analyst expectations for the first quarter, saying it anticipates revenue of 24 billion plus or minus 2%. Wall Street was expecting 21.9 billion for the quarter, so they're up almost 2.1 billion dollars more than what they expected. So the Nvidia is just skyrocketing. Quote, accelerated computing and generative AI have hit the tipping point. Demand is surging worldwide across companies, industries, and nations. So NVIDIA CEO Jensen Huang said that's exactly what he had said in a statement. So shares in NVIDIA were up more than 15% on Thursday in Thursday trading following that report. And NVIDIA's all-important data center business, which includes sales of its high-powered GPUs for AI applications, saw revenue of 18.4 billion, beating analysts' expectations of 17.2 billion. So they're up 1.2 billion more than the best expectations. The company reported revenue of 3.62 billion in the same quarter last year. Overall, NVIDIA's data center revenue jumped 217% for the year. While NVIDIA's data center segment is driving the ship, its gaming business is still an important piece of the company. Revenue for the division topped out at 2.9 billion. Investors were expecting revenue of 2.7 billion, up from 1.8 billion last year. So NVIDIA's stock price has skyrocketed more than 200% over the last 12 months, easily outpacing rivals AMD and Intel, thanks to its position as the world's leading AI chip maker. NVIDIA's growth, however, faces challenges from all sides. The company's chief rival, AMD, is investing heavily in its AI chips, including its new M1 300X or MI300X. I'm not quite sure how to pronounce that. According to AMD, the chip surpasses NVIDIA's H100 in certain workloads, but NVIDIA has refuted those claims, saying AMD's testing was incomplete. Intel also has its own server chips and continues to build on their capabilities, which is a great segue to very briefly touch on the crypto markets for a moment, which have been surging since October of last year, of 2023. This upswing seems to be in part spurred by the arrival of multiple institutional investors' Bitcoin ETFs, the upcoming Bitcoin halving in April, as well as continued investor sentiment that the U.S. and world economy are growing and healthy. On Friday's upcoming episode, I'll take a deeper dive into the crypto markets, their impacts, and latest news. So for now, thank you for listening. You can find all episodes of The Millionaire Millennial on Spotify and across all streaming platforms. And please be sure to follow us on Instagram, TikTok, and YouTube to see the latest episodes on video and connect with the TMM community. As always, I'm your host, Stack Banks, signing off and wishing you a very prosperous 2024.